Hello and welcome to the morning video from IG. I'm Brenda Kelly. It's the 24th of June 2013. We saw a marginal bounce in the FTSE this morning, albeit a short-lived one, owing to the fact that we've seen a sell-off in Shanghai and it falling by over 5% in trade overnight. We're now seeing the FTSE in the early 6,000 levels, and a fall below the 6,000 level will clearly open up the way for an even more gravitational decline and threaten to undo the entire rally that we've seen on the year to date. Our clients here are currently 67% long on the FTSE, but ultimately it does feel that there may be a feeling of a dead cat bounce at play at the moment, particularly when you look at the mining sector, which is very much under pressure owing to lower commodity prices across the board as a result of the stronger dollar. What is interesting to note is that there is a credit crunch taking place in China, and while the People's Bank of China have intervened to an extent, it does look like that is going to be in the system for some time to come and will likely play on investors' nerves. If we look at the US 10-year bond yield, that's also rising, and we're seeing a high of 2.67% at the moment, which we haven't seen since August 2011. So clearly the tapering effects coming from the Fed and the lack of clarity there from Ben Bernanke is going to play in investors' minds for this summer, and expect some volatility for some time to come. The defensive sector is ultimately seeing a little bit more investor interest, a little bit more risk averse than they have been in recent days. But over the last number of days, we have seen the Eurogroup finance meeting in respect of a banking union. Now that met with a little bit of a stalemate, and it does seem to me that the ESM, which is only having 60 billion in order to recapitalise banks, does seem a mite too small. The idea that it could be used retroactively for already capitalised banks does seem like a little bit of a problem, given that there is Spain to worry about on the lower echelons of that particular banking sector, very much underwater in terms of non-performing loans. I think what we can expect this summer is something similar to 2011. While there may be tail risks removed, there are very deep problems emanating from the Eurozone, and of course the uncertainty that we're seeing from the Fed. So for the time being, we can expect perhaps to see the FTSE drop a little bit lower. Again, as I said, if we fall below the 6,000 level, it will open up the pathway for around the 5,800 level. Ultimate support comes in around 5,600, which is the trend line support from the March 2009 lows. For more information, log on to IG.com.